Happy summer 2025. Today I'm joined by my business partners Lori Dos Santos and Drew Heatley. This year, our news has been filled with talk of tariffs, immigration, and global conflict. Volatility peaked around Trump's decision to impose tariffs in early April. In the past, investors used a traditional 60-40 stock-to-bond strategy to protect their wealth in periods of volatility like this past April. The 60-40 portfolio was developed in the 1950s as part of modern portfolio theory. It emphasized diversification and the relationship between risk and return. The 60-40 is perhaps the most popular strategy for having a balanced portfolio. The idea was to split investments with 60% in U.S. stocks in an index like the S&P 500 and 40% in U.S. bonds, often treasuries or investment-grade corporates. The idea was balance, where stocks drive returns in bull markets and bonds cushion the blow during bear markets. This mix worked really well for decades and was widely adopted during periods when stock and bonds moved in opposite directions, providing a hedge against market swings. Since the Federal Reserve raised rates during COVID, though, to fight inflation, stocks and bonds have become increasingly correlated, eroding the effectiveness of this strategy. Even today, when we review a new client's portfolio, there are almost always long U.S. stocks and long U.S. bonds only, with little to no international holdings and no diversifying alternative investments. At Green Wealth Management, most of our portfolios have some aspects of the 60-40 portfolio with both U.S. equities and U.S. fixed income. However, and importantly, we also add international exposure and alternatives such as commodities, managed futures, private equity, venture capital, long-short strategies, infrastructure, and even newcomers like Bitcoin. Some of these alternatives are meant to drive returns, while others reduce risk by being uncorrelated. The key takeaway is that the 60-40 portfolio is no longer enough. Clients need to build portfolios for the future by adding alternatives to U.S. stocks and U.S. bonds. Stay tuned as we talk about the ways to prepare for the death of the 60-40 portfolio.